The broadcast is now starting. All attendees are in listen-only mode.
Everybody, hello and welcome to today's June edition of Payroll Question Time. We've got a panel of 4 with us today, and remember, if you have any payroll questions, do put them in the chat box. We're going to try and get through those during the course of today's show. Just going to slow things down slightly while we wait for more attendees to join. We've got an awful lot of you registered for today's show, so it's going to be action-packed, and we know, well, I know because I've just discovered it a few moments ago, that there were changes already just yesterday to paternity pay, which were announced. We're also going to take a deep dive into a question that's been submitted in advance, which is all about an HR MRC inspection. So it looks like it's going to be a fun-packed session with loads to get through. They are, of course, going to be asking your involvement as well. We're going to be hosting 3 different polls during today's show, so please do stay tuned for those. Please do submit your answers, and we'll try and comment on those results as they come in as well. Just another reminder, and I will continue to remind you to please put your questions in our Q box, and we will ask those in real time. By all means, challenge our panel as much as you like. This is what the show is all about. If you have something, whether it's related to the topics in conversation today or not, that you need some help with in relation to payroll, this is your opportunity to put it in the questions box so we can raise it in real time and get the answers that you need. Now, just remind everybody, we are recording the session today, and we will also send you a copy of the slides. So you don't need to busy away taking notes of things you can see on your screen. You'll get a copy at the end of the show. There will also be a survey that we send to you, and that's really, really important. So if you haven't looked at it before, please do so. That's your opportunity to let us know what you want us to cover in future episodes. So again, if there's a topic you really, really want to tune in for, and we haven't covered it before, or perhaps we have and you want us to cover it again in more detail, this is your opportunity to send it to us in the survey, and we'll try and incorporate it in a future PQT. Last but by no means least, I'm going to read out our legal disclaimer, which says the presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, for those of you who don't know me, my name is Nick Day. I'm the host of the Payroll Podcast. You will find a copy of this episode released on the show as well. So if you want to listen to it again in audio only, stay tuned and subscribe to the show. I'm a Reward 300 member, and of course, I'm founder of JGA Recruitment, which is a specialist payroll recruitment company. I've been in this industry now for over 20 years, but believe it or not, I am still a relative infant in this world compared to my panel. So let me introduce you to the people we have today on the show, starting from my left to right, Richard George.
Yes, good afternoon, Richard George, Director of Education at the Payroll Centre. Again, Reward 300. We're all going to say probably the same things today. These are the people that are on today. So as with my esteemed colleagues, I sit also on a number of government panels and obviously run the Payroll Centre in relation to training in the industry.
Fantastic. And moving from left to right, Simon Parsons.
Yeah, good afternoon, everyone. It's great to be with you again for another episode. Again, as Richard's just mentioned, I think we're probably all part of the Reward 300 that are on the panel today. In fact, that was only announced last week, was it? Or the week before?
It wasn't.
For 2023. So we're all being appointed again to Reward 300 on a number of HMRC panels, BAYS and DWP. And it's great to be with you today. I look after the compliance strategies for SD Worx in the UK for our International Knowledge Centre.
Fantastic. I would say Simon's also very much an encyclopedia of knowledge when it comes to payroll compliance. If you want to challenge on any dates, histories, or particular numbers, I ask you all to do that because I love watching his responses and just testing him a little bit. So put it in the box. And moving again, last but not least, Sam O'Sullivan.
Hi, thanks, Nick. Yes, I'm Sam O'Sullivan, and I'm the policy lead at the Chartered Institute of Payroll Professionals. So the policy team act as our members' voice and the wider payroll professionals' voice. So please get in contact with us. Let us know what's going well, what's maybe not going so well, so we can use our contacts, like my colleagues have said, sit on a number of forums so we can really try and shape the future of the profession.
Fantastic. And if you are joining us for the first time today and you need support with anything in relation to payroll and perhaps you're not familiar with the CIPP, SD Worx, or even the Learn Centre, the Payroll Centre, then do get in touch. We can put the links in the chat notes. You can find out more about all of our esteemed guests in more detail and about their services as well. I'm sure most of you are aware of who they are and what they do, but if you're not, do let me know and I can respond privately to give you the links that you need. Right, on to today's discussion topics. Today we're going to be talking about reporting benefits and expenses deadlines, the blended rate for Class 1As, EU law reform consultations, and rolled up holiday pay, something that I remember discussing several years ago in the world of recruitment. So looking forward to talking about that again today. The HMRC Digital by Default Framework, HR, payroll, pensions and finance, bridging the gap and responsibilities. That's a subject we wanted to cover last month, but we just had too much to get through, so we'll challenge that today. And if we get to it, we'll get some hot topics and a Q&A as well. Of course, we'll be fielding your questions at the same time. Before we get to those, there is a poll coming soon. Before we do, we're going to jump into reporting benefits and expenses deadlines. A little bit of a reminder for you all. So Simon, if you'd like to kick us off.
Sure. So yeah, this is your opportunity because the deadline is soon upon us. So you need to get your P11Ds submitted and start preparing your P11DB as well for later in the month and payments, because you've only got a few days left. So you've got approximately a week from today, get your P11Ds done. So are you having any difficulties or challenges, or you want to know anything, then I'd probably say pop your question in the chat box and see what we can do. Just remember, if you're payrolling, you still have to do your P11DB consideration there, although I'm probably covering a little bit of the next point we've got on there. But if you're needing something, your deadlines are coming up fairly soon.
That's the 6th of July. So Sam, what are some of the things we need to consider?
So there was a change announced earlier in this calendar year, which removed the paper submission of P11Ds. Now, let's just be mindful, you can still give a paper P11D to employees, but you can no longer submit a paper P11D to HMRC. Now, I'm sure Simon and Richard will both agree with me, we weren't given much notice and it didn't go down very well. But there are options for individuals to be able to report that. So you can either use your payroll software, or you can use the PAYE online functionality that HMRC provide for free. So that's one thing that you need to really be mindful of, just to make sure you're not sending paper P11Ds to HMRC. They will be rejected.
Fantastic. So no more paper P11Ds. Richard, anything else we need to consider?
Yeah, I think, funny enough, we ran a webinar on it yesterday, actually, as a good subject. And a lot of the questions actually were coming out about who should be getting it. There's often quite a lot of confusion on the grounds of what the reliance is on, because it is obviously different to P60s. So really just a reminder, if an employee is still employed at the end of the tax year and still with the employer on the 6th of July, then obviously the P11D has to be given to them. Obviously that can be, as Sam quite rightly said, paper or electronic. If the employee has left after the 6th of April but before the 6th of July, then a copy should be posted to their last known details. And if the employee left before the end of the tax year, then the only obligation of the employer is on request. So if the employee requests a copy, then that should be given, but it's not a requirement. And I'm bringing that up, I say, because we had more questions on that yesterday with the 150 odd we had on than anything else. There was also very interesting points about how they're being delivered. Principally, a lot of employers obviously are now including forms within the electronic payslip process, including P60s and quite commonly now P11Ds. If that second group are included, e.g. the people who have left between the 6th of April and the 5th of April and the 6th of July, then what's their access? E.g. do they still have access to your solutions to actually get their copy? Because again, it can be something very easily overlooked, thinking it's all right, we've loaded it up to the platform, but we only give 30 days access once the individual's left. So again, it's very important the right people are getting the right thing, and really also again what the obligations are of that employer.
Fantastic. And last but not least, Simon, if we are coming close to the deadline here, and anything else we need to just remind ourselves of before the submission date?
I can't think of anything overly more, Nick. I think there's an element of just good luck to everybody. And if you do need help, reach out for help because the deadline's soon.
Super. Well, we've got one little bit of help being reached out upon here. So first question that's come in, which says, if there is an amendment needed to a P11D after submission, how should this be done? Sam, perhaps I can come to you for that.
Yeah, so with amendments, just one thing to be really mindful of. Let's say, for example, you've got the company car wrong, but you also provide a loan, for example. You have to resubmit all benefit on the P11D and correct the one that's incorrect. Don't just resubmit your company car, because HMRC will presume that actually there's no longer a loan. So everything needs to be reported on the P11D for that amendment, but you also need to include everything that hasn't adjusted effectively. Now we're into this electronic amendments and the electronic submissions. HMRC have published a G form that you can complete for any adjustments. If there is a company-wide, God forbid, a company-wide error or omission, for example, HMRC currently will only allow for you to complete a G form for one individual at a time. They don't have the ability for you to make a bulk amendment. It's something that the Employer and Payroll Group, which is a forum at HMRC, is something that we are discussing, because with all the will in the world, people will make mistakes. So they need to be aware that we will need that functionality to be able to do a bulk submission. But at the moment, that is how that would work, Nick. So hopefully that helps.
Super. And I'm going to come to you, Richard, with another question, particularly because you delivered a course on this just yesterday. So Jessica says, is there any actual guidance on how to do the P11DB online? I've fudged my way through to date and I've created my own notes, but some advice would be helpful.
Well, other than the set guidance on the P11DB, I can't think of anything specific. Unless Simon is aware of anything else, I'm not.
No, not specific, but I think this is going to be a common question and common concern. And I've seen a lot on social media asking, how do I do, especially when you've payrolled, trying to figure out, because when you go into the P11DB form, it tells you have to populate the P11Ds, which is true if you've got Class 1A on P11Ds, but you don't for benefiting. You go to the next section down, and there's an adjustment area, and you don't need to populate P11Ds for that. So the journey is a bit misleading, and I think that's the challenge people are facing is they know where to go. I found the P11DB on my PAYE account. I'm now completing it. Oh, it's saying I've got to enter all the P11D information. Sort of skip that, go to the next. You just need the adjustment line. So it is a little bit clunky. I guess HMRC will probably take the view that, well, it's so intuitive, isn't it? Everybody should just know. I've actually published a few responses on social media on how to complete the P11DB. Maybe it's one I'll publish on my web, my normal blog as well, if it's such an issue, although time is running out, isn't it? But you've got a little bit of time, but it is fairly straightforward, to be honest.
I guess the secondary issue as well, Simon, is the substance of your software as to how you're actually collating your 1As, e.g. your
Correct.
Class 1A national insurance. If you're lucky, you have a piece of software where you're feeding it into it, if you're payrolling, and it's creating a non-showing, non-paying item. But it could be a completely manual process for some still, that accrual of that figure. So I think there's, it's not as easy as it probably could be.
Well, and there's a challenge there as well, isn't there, Richard? Because the Class 1A liability is a combined result of the benefit. So if you are using notional Class 1A amounts in the solutions, your payroll engine, at individual benefit level, that's one aspect, but it's not actually the right value. So it's good for accruing amounts, but it isn't actually for the submission. So you need the total of all the benefits times the percentage rate to apply it. And I guess some of this covers a little bit probably the next element in relation to don't forget the blended rate. And you're quite right, Richard, some solutions you may be dependent on that for doing your P11Ds, P11DBs, and it's not offering the option of the mix. And I know that some may say some of the P11D software providers don't want to promote you benefiting, so they probably don't make it easy for you to do the adjustment because they don't really want you to do it.
I guess the other minor advantage, obviously, is the timescale on the Class 1A is slightly longer. So it is obviously by the 22nd, but yeah.
Yes, but you can use the HMRC form. It's simple, single, although I guess there's an element of to me it's simple, Nick, but you know me, my brain works in kind of a
well,
you know,
I think it's a good time to
it
say
may not be.
And to give a shout out to CIPP here as well. If you are a member, there's obviously a help desk and support that can give you if you need support, but being guided through those forms, and there's a really good resource place you can go.
But what might be interesting, sorry, is to understand the questioner's notes. Actually, you know, if you want to feed them, I'm happy to build them into a blog.
Super. Okay. Well, actually, we've got another question that which kind of links to that here, Simon. I quite like this question. Are you or any of you part of a working group who can make the P11D process smarter? If not, why not? Let's create that. Let's make it happen.
Well, we can answer the first part. The second part is slightly more difficult. I think for all three of us, the answer is yes. The second part of the question is why can't we? And that's because we can only feed in. We can't make decisions, and so decisions are made by others. And sometimes they don't agree with the feedback given. Is that fair to say? Although they do
absolutely fair.
Although I've got a £5 bet on why we haven't had the question yet. When are they making payrolling mandatory? So come on, people.
Only a fiver, Richard.
Let's move it to the next question. I'll come to you again, Sam, if I may. Regarding P11Ds, do we still need to print, sign and post the employer's declaration to HMRC?
No, that's been removed as well. So, you know, we're going to touch on this a little bit later on in regards to this digital by default framework, and that might kind of touch also upon where HMRC are trying to go. Maybe payrolling at some point become mandatory, but when they remove the paper submissions, the declaration would have gone alongside that. It's all now electronic. Everything's electronic in regards to your reporting of benefits and expenses.
Okay, so a question here. I had an issue with last year's P11Ds. As a company was bought out, all employees made leavers and then re-employed or moved over to a new PAYE, and P11Ds were issued from the new company as those payments were also taken over. Half of these employees were told in April that they owed PMI, but when they call the HMRC, everyone gets a different answer or code change. It's becoming problematic as I seem to get no straight answers. More of an observation there rather than a question. And similarly, another one said, I've tried the employer helpline, but they wouldn't help, and I've raised a letter to HMRC, but I've had no response still. Actually, there is a previous episode we've done here, which is worth going back to. You can find it on the Payroll podcast in audio, and if you've subscribed in the past, we have talked about working with the HMRC. I'm not sure that's necessarily going to answer your question, but there are ways of getting responses that you may want to go back to on that. But I wonder if people are struggling to get a response from HMRC at what is a particularly busy time, any quick advice or solutions we can provide to help these people out? Simon.
Well, potentially yes, and I think Sam and I will probably give the same answer. Richard may also, I don't know, but he'll answer. But we do have means of escalation. I'm going to be careful with what I say here. Escalation is not first port of call. Does that make sense? So if you're really struggling you can come, for example, to Irene or the BCS PSG or CIPP. I imagine even the payroll center under the old Payroll Alliance type view, or even SD Worx if you're a client. We do have contacts that we can escalate through, but they will always say to us, have you tried the proper route first? Now, I get lots of people that try to not use the proper route first and just want me to escalate. I can't, and that uses pixie dust. Yeah, but if you've hit a brick wall and you can evidence that to me, I think all of us can probably escalate that through probably very similar channels, and they will pass it through, because sometimes a contact to an HMRC department from the bottom is not as effective as an HMRC contact from the top. Does that, if that makes sense?
Okay,
but they will want us to not use the pixie dust without you actually doing what you're meant to do first and failed. Is that fair, Sam, do you think?
Yeah, absolutely fair. Yeah, I was going to add to that as well. A lot of people, you know, we can all kind of relate to this. You sit on the phone waiting for HMRC to pick up for 2 hours, you know, you're starving, you need another coffee. And a lot of people have said to me, call at 8 a.m. in the morning. No one's on the phones at that point, as in what HMRC call their customers. They're not on the phones trying to get through. So there's some kind of more out of the box ideas that we could use as well. When they have the online chat functionality turned on, that's actually not a bad route to go down. You can also print out the whole of your chat, so you've got an audit trail as well. So maybe run your chances, see if you can get a hot coffee and get your call answered within 15 minutes if you try at 8 a.m. Or use the online chat functionality. You might just get through.
Yeah, that's really, really good advice. And as one observer has written, is there ever a time the HMRC is not busy? That's the problem they've got. And interesting, Brian followed up on your £5 bet here, Richard, with a comment saying, when are HMRC going to make payrolling of benefits mandatory? With a big smiley face.
It's always going to happen, and there is no answer.
But let's move it on then, because I know some of this does relate, as we say, to the next part of the show anyway, which is in relation to Class 1A national insurance, as Simon mentioned. A reminder that we're using blended rates. So what do we need to, well, maybe give us an overview first, Simon, and then we can consider what we need to consider.
Yeah, sure. I've just got to open my tab just to remind me what they are, because we've moved on a year. But remember, we had 3 changes to the national insurance last year. We had a change in April, July, and November. And consequently, the Class 1A liability on benefits in kind is different. So before, 22, 20, 21, 22 or whatever, it was 13.8%, and for 23, 24 it's 13.8%, but that's next July, not 2023 but 2024. This last year we're impacted by this all these funny changes we had 3 times, and we've had 3 prime ministers or whatever it feels like, or certainly 3 chancellors. You've got a blended rate of 14.53% to use. Now, sometimes I see questions saying, but they only had the benefit before November, they didn't have it after, and others, well, they didn't get the benefit till the November, so don't we get that all at 13.8%? The assessment of Class 1A is on the 5th of April, regardless, for all benefits in kind. And so the rate for Class 1A on benefits in kind is 14.53%. Now, Class 1A on termination payments is different, and it's different calculation basis. It might have the same label, but it's actually different.
Yeah. Okay. So I'd say the queries we get is twofold. Number one is the whole area pro rata, and we've seen that throughout the year, that people still live in the world that they think you pro rata month to month to month based on the rate at that month. And as Simon quite rightly said, it is a payment at the 5th of April. When it comes to the Class 1A on terminations, the other area we're getting is when people are calculating it. Remember, it's when due, not when received, is absolutely key and critical, because it may be due in October, but because of the compromise agreement, you don't make payment until the next month when the rate could have changed, but it's when due. And the other area that people have, I guess, not possibly focused on is pay settlement agreements, which again will fall under the same blended rates when that's considered for the Class 1B situation. So,
well, I think we're going to get some more commentary here. So let's run a poll and find out from our audience who is aware of whether or not they're using blended rates. And we'll ask for the panel to comment on these results as we come in. There's three options here. Yes, I was aware independently. Yes, but the software prompted me. And no, I hadn't heard. If we can get everybody involved in that poll, that'd be absolutely fantastic. Over 100 of you watching right now, so we should get a really strong response to this and a reliable survey result, which is really interesting. While we're waiting for that to come back, and we will comment on those results, I want to just ask the panel a question. It's quite a deep question, but it came in advance of today's show, which you're always welcome to do. And the question is this: has the panel in their careers experienced a change in view by an HMRC inspector to a previous judgment put in writing by another HMRC inspector? This happens in VAT, but would like to know if they have seen it in PAYE and national minimum wage audits. If they have, does the employer have any opportunity to escalate a complaint to the change in judgment? I'll raise this now because we've just been talking about the HMRC, so I think it's probably relevant to bring it up here. Simon, I know you've seen this question in advance. Perhaps I can come to you first and just get your view.
Yeah, sure. There's a couple of flavors in there, Nick. So as a dependency, so minimum wage is very different to PAYE, but traditionally an inspector can come in and change view and give it, but traditionally the prior view stood to the point of them doing that. So if you'd made decisions or calculations on the prior basis view that you have in writing from the inspector, that usually stands, and that is the basis. However, from the day they say that's wrong, it needs to change, that new basis applies. That's the experience. Now, minimum wage is slightly different. They're not, we say they're both audited by HMRC, but they're not the same thing. One is about tax and one is about employment law that comes under business Department for Business and Trade, formerly BEIS. And so they're the policing enforcer of another government department, and they will go more to law, so and can be a bit retrospective. But generally, you'd think they would accept something that's in writing from the prior inspector. However, can you escalate? In both cases, you can. One of them may be by making a complaint or an appeal to the HMRC themselves. The other, you'll probably find you'd have to go to court or a tribunal to have them overturn. And in fact, there's a recent case, in the case of, I think it's Lees versus HMRC on NMW, where they were served an enforcement notice on a holidays scheme where the court has actually reversed the enforcement notice that was placed upon them. So interesting. So, yep, you can take action, but there are differences in the various flavors of stuff we're talking about today.
Nice. And Sam and Richard, I know you've also seen that question in advance. Any additional commentary you'd like to add to that question?
Not from me, thank you, Nick.
I guess the key for me is kind of where Simon was. PAYE and national minimum wage are very different animals. When it comes to national minimum wage, you must be compliant. Therefore, if there is a historic compliance issue that has been brought up in a further audit, which could be purely down to how the item or items have been viewed, then there would still be an issue of non-compliance in the past. Would you agree, Simon, on that one?
I would, yes. And there's an element of thinking, although you may have something in writing, that the latest auditor may think you hoodwink them, or there's a more clarified position. As you say, Richard, NMW law is very different to PAYE.
I mean, a good example could be a savings scheme, and how that has been shown as being structured previously, when actually it's not the case. It could be the fact that in the previous audit, the search didn't find a connection with, say, for instance, the group who are holding the money, while the second one could. and I'm not going to bring any particular cases, but a certain freezer company is one I will consider, where the application of where the asset sits could change through a different form of investigation, and therefore it has always been wrong. So I think the national minimum wage one is definitely very different to PAYE, which I would suspect is probably far more down the line based on what you know at the time.
Yes.
Okay.
And as you brought
Yes.
up the certain cold company, that's where it might be good to look at the recent ET case in the case of Lees, because I don't think it changes the ultimate position, but the fact that the money was then repaid was viewed as discharging the liability, whereas I think the original fear was that the employer would have to top up to minimum wage and give them their money back. I think in the Lees case, I think they convinced the tribunal that by giving the money back, the underpayment had now been met. So all very interesting, but they're all case by case. It goes back to our disclaimer, Nick. They're all different depending on different circumstance.
Sure. The Lees, how do we spell the Lees, Simon? Do you know? And I'll try and put a link in the
Lees.
So I can
There was
find
a
that
case, I think it was earlier this month. I'm trying to think when, but and it was employment tribunal, okay, I think. Right. But it was an appeal against the national minimum wage enforcement.
Well, let's bring it back then to blended rates. Have a look at some of these results. Yes, I was aware independently. Here we go. I'll go back for those in audio only. So the question was, were you aware that we are using blended rates? 3 answers here. We've got 63% said yes, I was aware independently. 14% said yes, but the software prompted me, and 24% said no, I hadn't heard. Sam, what if I can get some commentary from you on this one, please?
Well, I'm really glad that the majority were aware independently. And I think really the answer around the software prompting you goes back to our previous conversation, that don't just rely on the software, because it depends how it's been made up. So that goes back to what Simon was discussing earlier. To the 24% that weren't aware, I'm so glad you're here, because we've, like you say, we've only got until next week to get those submitted. Yes, you've got a little bit longer for your P11DB payments, but I'm really glad you're here, because now you do know.
Absolutely, yeah, that's what this show's all about.
It really adds to the critical nature of keeping on top of what you're getting. So the employer bulletin, for instance, of HMRC is so critical now, I think, to all payrollers, because it was certainly incorporated and has been incorporated there. The use of the likes of us, CIPP and others, who are continually feeding you guys, whether it be news, blogs, webinars, whatever they may be. We try to keep, as does Sam and her team, our membership and our sort of partners up to speed with these things, and it's just really key. And I think at the moment more than ever, and I think we're going to see that escalate as we get nearer the end of the year.
Yeah, I couldn't agree more, Richard.
Okay, super. Well, let's bring it back then to the slides if we can for a moment. We're going to talk now about the retained EU employment law reforms. Remember, if you've got any further questions on any of the subjects we're talking about today, or indeed if it's something completely separate that relates to payroll and needs some help, please do put it in the questions box, and we'll welcome all questions, and our panel will do our best to answer them in real time. So retained EU employment law reforms, there is consultation seeking views on reforms to the working time regulations, holiday pay, and the transfer of undertakings, the protection of employment regulations, or known as 2P as well. Richard, I wonder if you can kick us off and give us a bit of an update, please.
Okay, well, so I give the bigger picture. For those who don't know, obviously, we are coming in, well, we're now halfway through the final transition year from Brexit. It seems a long time ago, but it's 3 years once we get to December this year. The initial, I guess, exit plan incorporated keeping legislation that we had within Europe at a point under, well, really retained law. Just understand some kind of scale within the UK. I believe at the moment it's around 4,000 laws and guidances actually take priority and precedence in the UK. All of those, therefore, have to be reviewed over the coming 6 months to possibly further depending on the ruling placed, but they need to either be retained, which would mean moving them into secondary legislation, revoked, which is probably the latter or the lesser of, e.g. getting rid of altogether, or actually adjusted and changed. So there is certainly areas that the government pinpointed at the start of this retention and revocation, such as 2P, and certain areas within the working time regulation, which don't fit as well as they possibly might for the UK population and working force. So principally where we are now is that they are now consulting on some key elements within the regulations that we have. 2P's always been very high priority here, and then possibly other areas too, depending on where they go forward this year. I guess one of the other key aspects is there was obviously the delay, or has been a delay through May, in relation to the Act, which was due now, or should have been due by now, to actually start the move forward. And I guess part of that has been the level of consultation required.
Okay, great big picture overview there. Simon, anything you'd like to add?
Only probably a little bit, Nick, to say that this has implications potentially on some of the proposals focusing on the complexities of holiday pay, which I think will probably come to some of the parts, which is supporting Richard, in there. So yeah, interesting times. Changes are afoot.
Yeah, and actually we had a really interesting comment just linking back to our last conversation piece, and Sam gave some really good advice about when you can contact HMRC in the mornings and using the chat. Jeanette's mentioned to remind the audience that they're also apparently open on Saturday mornings. I don't know if that's accurate, but if it is, then that's also another prime time if you want to give up your Saturday mornings to contact the HMRC. Maybe that's a time when hopefully you would think things might be slightly quieter.
We know how to have fun, Nick.
There you go. You see, payroll comes first. That's why we're here. Dedicated. Payroll comes first. Excellent. Well, we've got another poll, so let's get everyone involved again. And this actually relates to holiday pay. We talked rolled up holiday pay is something even I'm aware of in the world of recruitment. Will rolled up holiday pay make your life easier? 3 simple responses for you here. Simply yes, no, or you are not sure yet. So do put your answers in there. We'll talk through those results as they come in. Any more questions, please do put them in the questions box. I think we've caught most of them up to date. There is a particular HMRC escalation request here as well, where apparently every channel has been followed panel. So I will share the details of that individual with you 3 later on. And if you can help, that would be greatly appreciated. And then we're going to dive back in after this poll into the HMRC Tax Administration Framework Consultation, where we are going to be talking about, as Sam mentioned earlier on today, the modernisation of income tax services and digital by default. But let's have a look at some of these poll results. Hopefully it's a pretty simple question, so we can get those results in nice and quickly. I'm going to come to you this time, Richard, if you can have a look at these results. We've got 20% said yes, it would make their life easier. 8% said no, and 71% said not sure yet. That's quite interesting. So, Richard,
I would strongly suggest that's because everybody's got so much to do. This is very early and people really haven't thought about it particularly. I guess it's going to be relative as well to very different industries as to the requirement or the need. People may say, well, actually, what is it? So we are going back to an older world where what we're talking about with rolled up holiday is actually allowing payment of holiday either before or after, rather than it being linked directly to holiday taken. It was actually made unlawful. It was the Robinson Steele case way back. I can't remember the exact date of it.
2006.
Yeah, there we go. So thanks for that one. Versus PD Retail Services. So I remember that bit, if nothing else. So principally, it made the whole process of rolling holiday up within the statutory holidays, the Regulation 13, unlawful, and therefore holiday had to be calculated and used and paid rather than rolled up into the payroll itself. So there were industries where obviously this could be positive. When you think about the actual fluctuation of hours, the fluctuation of possible contractual time spent with the business, to rather than go through the, I guess, the manual process of actually calculating variably paid holiday, to actually have a form of rolling up what they're due at a point in time and paying it to them, I guess. So I can see the
Sure.
value to some.
I mean,
But I guess
of course, some of the
yeah, go for it.
challenges came from recruiters, of course, which there are many, of course, doing temps and contracts where there would be advertising hourly rates that were not actually accurate because they would be inclusive of that rolled up holiday pay back in the day. And you'd have people very upset when they realised that that had been inclusive of the holiday. It hadn't been communicated. I think a lot of this is down to accurate communication. And if we are going to be doing it again, then there's an absolute responsibility on the recruitment agencies to get involved in temp work to be very, very strong in the areas of communication, as it is for the employers as well. Interestingly, Emmy's put a comment in the box here to say, did anyone on the panel actually think that average holiday pay was a good idea in the first place, or did it even make sense? Simon, what are your thoughts on that?
It could make sense, but it's not written in a way that makes sense for anything. And that's how I've responded to the consultation, because this announcement on rolled up holiday pay goes a little bit with the consultation that was announced a few weeks before. And I think the not sure yet response is where I'd have gone as well, because the consultation wasn't really about rolled up holiday pay. It was about a means of getting entitlement. So it didn't really reveal what the entitlement payment was. So we may have ended up with the same. But the challenge with, obviously the Parliament thought it was a good idea when they passed it on the 6th of April 2020 on the revision. Don't know why. It's absolutely balmy to an extent, but it doesn't work for any frequency other than weekly. Forget that. It doesn't work for any frequency other than weekly, which is something I've pointed out in the consultations to the DBT. And equally, if it's weekly, you have to be paying on time. So it doesn't work with arrears either. And I think that's the important thing, is actually for, I'd say 99% of employers, the application of average holiday pay strictly in the confines of the law is actually impossible. Now, if you're allowed it just to include payments, it is possible. But I think this is the problem. The government are in a conundrum of what to do.
Interesting. Well, let's jump back into the slides. I'm going to come back to you, Sam, if we can, because you mentioned this earlier on in the show. We're going to talk a little bit about the HMRC tax administration framework consultation, modernising and simplifying income taxes, and as you mentioned, the digital by default. So just bring us the audience up to speed with what this is all about and what we hope to expect from it, really, what the consensus is.
Yeah, sure. So essentially, the consultation set out the government's plans to modernise the income tax services. So it focused on pay-as-you-earn and income tax self-assessment tax regimes. What they're trying to do is provide a more modern and efficient income tax service, and it focuses on supporting a more digital way of working. One thing they didn't define was what digitally excluded means. Well, that's kind of key. So in our consultation, we did ask that there is a very firm definition as to what digitally excluded means. Does that just mean I don't want to? Or does it mean I am, physically impaired and unable to? So we need some steer there. Ultimately, what they want to be able to do is free up the phone lines. Let's face it, no one can get through because everyone's having difficulty, so they call HMRC. They want taxpayers to quickly and easily self-serve, ultimately. They said that it's in line with their charter commitment of making things easy. It also brings me on to tax simplification and whether that should now be included in the HMRC charter, as they've now taken tax simplification under their wing. So really, in a nutshell, Nick, they're trying to make everything digital. They're trying to streamline things, and they want it to be easy for their customers to self-serve. Some of the questions they asked weren't really well received when me and my team opened it up. They asked for people to give examples or ideas of what we could do if we got rid of a tax code. Well, tax codes work perfectly well because employers receive them and we operate them when we're told. We feel at the CIPP that HMRC need to amend some of their internal processes. It doesn't necessarily need a complete redesign. The tax code works, but better two-way communication from employee, employer, and HMRC would essentially fix these issues. So that's a starter for 6, and I'm sure Richard and Simon will have more to add on their thoughts.
Brian Spalling's already commented and said that, well, they still won't get rid of P45s, which I know will
Funny enough, HMRC came to our conference week before last and did discuss the fact that it's now on the cards. So there you go. They wouldn't give a date or a process, but it is now in focus, the whole area of the removal.
From an outsider looking in, and I'll put my hands up for this bit, this makes sense to me that we're going to try and make it digital by default. We're moving with the times, modern world of work, keeping it digital, and improving the environment, reducing the paper trails. Hopefully this is a good thing, right? But I'd love to get your take. Let's start with you, Richard. You've always got a good view on the way these things are done. What's your perspective?
Yeah, I think it's so it depends what plateau you sit. For a large business where they have moved significantly in every area, it could be accounts payable, it could be purchase ledger, it could be anything, where that removal of paper and the ESG platform, so obviously the environment platform that the company's working to, it's certainly a bigger focus. I think where you have a smaller employer with less administration, less technology, it's obviously a very different world. You look at making tax digital as a prime example for the self-employed. How far behind is that to everybody else? Because it's having the people, having the mentality, the solutions, the ability to actually do it varies so significantly from company to company. Yeah, and I think that's always going to be the challenge. It's a bit like anything. If you introduce e-pay slips for your 8,000 staff, there'll be 500 people who just won't. And you will end up having to coax them manually into it, show them how to use their mobile phones, whatever it may be. So there is always going to be a group or groups at every level where this will be challenged. It's just education. It's setting the right standard for employers. It's simplifying process. It's all well and good, but if the process is so convoluted, so broken, so extended in what different things can happen, then it will therefore create even more roadblocks. So I think there's work afoot prior to anything.
And Simon, being a member of Irene, I'm sure you're probably involved in this as well. Obviously, concluded on the 7th of June. What's your view?
Yes, it's difficult to know sometimes where to start, and there have been some subsequent consultation meetings with various groups which are all linked with this. The problem, from Irene and the BCS PSG, which I chair as well, we're all for modernising and simplifying income tax services. The challenge is that what they mean? Is this modernising and simplifying income tax services for HMRC? Because sometimes I fear that's the angle, which doesn't mean it's modern or simplifying for you, the employer, the operation of payroll. That's simplification for them, and they want you to do it the way they want, and that's the fear. And the reality is, from an Irene point of view, our goal is that it's for mutual benefit. So this is simplification for both. And I think there's an element of reviewing and thinking some of the simplification and modernisation they've done, has it actually made it simple? So RTI has brought in a level of simplification, but actually it's brought in a level of complication. and they're probably getting lots of people calling them. So the intention of this is sometimes to reduce calls, and sometimes I think the choice and a method of implementing is actually increased calls. So are they actually getting the result they want? And certainly some of the consultations seem to be a basis of one size fits all. In other words, we all have to fit a size 7 shoe. The problem is we haven't all got a size 7 foot. And I think, but they can't potentially see it that way. But it's a reality. We're not all the same. There are differences. So you go to a shoe shop, you've usually got a range. And I think there's an element of they need to have a range. But going back to the digital by default type thing, I mean, great. I believe in these things, Nick. It's just I'm not sure about some of the methods they're tackling it, because I think they're one-sided. So yes, I'd go for it. But equally, I go back again with what Richard's saying there, the digitally excluded, what does that mean? Even in development of payroll software at times, I think sometimes we as suppliers or payroll software will say, well, we'll get them to work it this way, and we've given them capabilities to do everything. The reality is that some people don't want to do it. They want you to do it. So they want someone else to do it. They don't want to do it themselves, no matter how simple it is. And you could say, well, we'll charge you 50 quid. You could do it for free. They'll say, here's the 50 quid. You do it.
I mean, to rephrase a question that's been put into the box here, one solution would be, if they want to reduce the amount of calls coming in, is actually just to improve the answers and the guides in particular that they have on their website, then you wouldn't have to keep calling them. Which is an observation here from someone that's watching the show. And then I've got another comment here from Jeanette that says the HMRC are still changing new starter tax codes to BR or 0T when they shouldn't be. Again, it's I guess it's difficult if you're trying to make something simple, but then you get these things happening on the flip side. It's challenging.
I guess you could say also,
Yeah.
you know, you could use examples of smart coding as a prime example here. You know, smart coding is great for HMRC because it simplifies the process for them. But if you have bonuses during the year, it can massively reduce the simplification on your end. So there will always be a two-way, so we say, gap, shall we say, in what simplification means.
Yeah. Well, and I think there's an element of it's something that I'm sure all three of us repeatedly try and get across in our consultation meetings. Sometimes when a problem is identified, the default answer seems to be, we need to improve the education of the employer. Whereas actually the default answer should be, we need to look at the process to see if it's broken. And if we can improve the broken process, we could simplify it for the employer. Because if the employer is getting things wrong all the time, that's usually because it's too hard to do.
Sure. Well, let's go into our third and final poll. Again, there's still links to simplification, to be fair, because we're talking now about the scrapping of paper P11Ds. Has this moved you towards payroll benefits? Response options say, yes, we are moving towards payroll benefits. I'm not sure. Or no, we are keeping the traditional P11 option. Still got over 100 of you joining us, which is fantastic. So please do, if you can, put your response in here. It's much better to get a full overview with 100 people, be a really good response. So again, in regards to scrapping P11Ds, has this moved you towards payroll benefits? Yes, we're moving towards payroll benefits. I'm not sure yet. Or no, we are keeping the traditional P11D option. While we're waiting for those results to come in, there was an announcement, I think, that you caught that I think came in only yesterday, or maybe even been today, Simon, in relation to paternity pay being split or something along those lines. Wondered if, because it's fresh news, I'm not sure how up to speed you are with that announcement, but maybe while waiting for those results to come in, you can bring us up to speed.
Oh, yeah, so I could give you a little bit of information. So the Department of Business and Trade, DBT, used to be BAYS, they released their response to consultation. And I see Matt has kindly pushed something out, the CIPP as well, Sam, probably yesterday or today, about the proposals. So as a result of that, because it was originally part of a consultation that happened in 2019, there are some proposals, and one of them, the main announcements, are to give fathers and partners more choice and flexibility in how they take paternity leave. So the proposals are to introduce the ability for the 2 weeks to be split. The oddity here, Nick, is I know that some employers do this already, but legally they shouldn't be. And the other is so that is you could take a week's paternity leave, go back to work, then take the second week later. At the moment, legally, maternity leave has to be taken in one block of 1 or 2 weeks. The other is to give the father or the partner, because it's not always a father, the ability to take that leave in the first 12 months, whereas currently it's 8 weeks. And so there are other flexibilities, and then you go into the neonatal and other proposals. So information came out yesterday, need to analyse it a bit more on what they're suggesting and see how it develops, but interesting times for parental leave rights going forward.
Certainly, I for one would be a huge advocate for being able to take it later. I wasn't able to take paternity leave for either of my children, but if I was able to take it within a 12-month period, I would have been able to take that benefit, which was a bit of a shame. But that's a personal case, but that's my view. Let's bring it back to the results then we'll jump into the next part of the show. And Samantha, perhaps I can ask you to comment on the results once they come in. So just for those in audio only, 46% said yes, we're moving towards payroll benefits, 27% said I'm not sure yet, and another 27% said no, we're keeping the traditional P11D option. Samantha, back to you.
Yeah, so I think, 46% they are moving towards them. I wonder whether they were already payrolling their benefits. From the latter two options, I do get a feel that because you can't payroll all benefits, that will put people off. So what payroll professionals don't want to do is have two administrative processes for one thing. So you don't want to be payrolling benefits for the benefits you can payroll and then still having to do this traditional P11D reporting for your accommodation benefits and for any beneficial loans that you provide as well. So I do wonder whether for those that aren't doing it yet, or for those who aren't sure, I wonder whether if all benefits could be payrolled, whether that would sway their decision.
Interesting. Well, let's jump into the national minimum wage here. We've got the name and shame list has been revealed, and we know that some employers potentially are in denial. Certainly not a list that you'd want to be on. But we also want to know is what can the employer do about it? And there is, of course, a premium webinar, which is going to go into this in much more detail, run by the SD Worx Academy that's taking place on Friday, July the 14th. So again, if this is a subject area that you're very much keen to know more about, I highly recommend you sign up for that. Perhaps, Simon, because obviously that's being run by the SD Worx Academy, I know your involvement in it. Perhaps you can kick us off with this subject for us.
Yeah, sure. And certainly, I know I've forgotten the name of the guy. Is he called Gary from the current promote officer for national minimum wage? Is coming around trying to see organisations about promoting national minimum wage. One of his strap lines is national minimum wage isn't about a rate, it's about a calculation. I think that's one of the lines he used, and there's a lot of truth in that. And I think the name and shame list that we've had 202 employers named, there are some big names there. If you went to them before they had their inspection and said, do you think you've got a problem with minimum wage? They'd say no, but they've been found to have a problem. And I think it's because it's a complex area to understand. So I think generally employers are in denial. They do not believe because they pay their basic rate above minimum wage rate, but don't understand. And so within the notification from HMRC or the Department for Business and Trade, actually it's them that really published the list from the HMRC audits, and these go back some years because audits are intrusive and long. Some of the reasons are because you're not really recording work time properly, you're not counting deductions for the benefit of the employer, so you don't realize that actually changing things in their construction doesn't necessarily solve the problem, because if they're paying the employer, that reduces pay for minimum wage, and also I think significant amount of apprentices. So there's a significant amount of apprentices being discovered to be underpaid. One of the reasons is because they're not really apprentices at all. So just because you call a job an apprentice or apprenticeship doesn't make it one. They actually do need apprenticeship agreements in place, so they're finding that we're kind of putting, if I put it, periphery logic to the application of complex law, and just because you call something something doesn't make it that way. And so there is an element of being very, very careful. But something I've blogged on about a lot since the announcements, it's surprising how many employers who think they are compliant with national minimum wage law may find that actually they're not, and they don't understand it.
But a lot of it's still, maybe I'm incorrect in making assumptions, Simon, but isn't this a lot because there's still a lot of confusion about the national living wage, and we're reading that's national. We've obviously covered that a lot in the in previous shows as well. So I wonder if you can perhaps provide a little bit. I know it's a big subject, but a little bit of clarification about, for those that I know that recently you mentioned, I won't give names away, but 4 big employers came together and didn't realise perhaps any of them were in contravention, and that wasn't necessarily the case. So can you bring some of that to light?
Yeah, sure. Well, that relates to, yes, we've recently had the Department for Business and Trade, or the parliamentary committee that deals with business and trade, had the supermarket retailers in, and they asked them a direct question: are they, and it's not national living wage, are they a living wage employer? And 3 of the 4 confirmed they were. But the reality is none of them are. So the Living Wage Foundation, who accredit living wage employers, have confirmed that none of them have living wage accreditation. And that's the difficulty. But obviously they think they do. So there is confusion even there. So what does it mean to be a living wage employer? It means you're conforming and accredited by the Living Wage Foundation. And they also do living hours and living pension. They're 2 other schemes because they're concerned about 0 hours workers. So to claim that you have something they accredit is not quite right. But they did state that to the parliamentary committee that they are living wage employers.
And if someone finds themselves on the name and shame list, Sam and or Richard, what can employers do about it? What's the protocol? What do they need to think about? Sam, I'll start with you. Oh, sorry, go Richard.
Sam,
go on, Richard. No, you carry on.
I think the issue is it's not something that just happens. There's usually plenty of opportunity for the employer to sort it out, and you know, in a lot of cases, it's substantial areas. And I think this goes back to where Simon was. People believe that they are paying the right amount of money, but where the education falls down is understanding the nuance of especially deductions from pay. But in the case of at least 2 of the largest ones, is what you're requiring the staff to do, purchase, have for the fulfillment of the role. And I guess the secondary on that is understanding as well that even though things are optional, it's the whole point of, if they weren't doing the job, would they need them? And we can go back to another case. It was Augustine against Data Cars Limited, where basically the guy had the option of a uniform. The guy had an option of hiring a car. He chose to do so. They deducted it from his pay and took him below national minimum wage. Their argument was, well, he didn't need either. But the principle is, would he have bought the uniform or would he have needed the car? We look at the recent cases in the naming and shaming, you know, where employers request staff to wear, for instance, black trousers, or I will use a smart presentable shoes line, where the staff buy them themselves. Again, would they have bought them or would they have needed that purchase if they weren't doing the job? So there is all this nuanced area that is where I guess, the big errors occur. Very few is it's because you're not paying the right sum of money. It's, are you deducting the correct amounts? Or B, are you actually paying your staff for working time? And I think these are the key aspects that employers do ignore. Sorry, it's just my silly watch. And I guess, you know, if there is a positive about naming and shaming, it's giving loads of scenarios to employers to actually say, well, hang on a minute, we do something like that. So there is, I think, a really good level of education that possibly comes out of the naming and shaming as a sort of secondary status from it. You know, somebody may say, oh crap, we've got our people in black trousers and they've gone out and bought them. Looking at this employer's been in trouble for it. So, you know, it gives, I guess, more employers the opportunity to actually review what they're doing. So I think it's a good thing.
Yeah, I think it's a good
We've
thing. I
had
mean, people
some,
on the bread line, you know, national wage is important, and actually impacts. If you get named and shamed, it can impact your ability to attract and retain your talent. And I know, you know, that's expensive. It's one of the biggest challenges for HR leaders at the minute is trying to attract and retain good talent. And if you're on that list, it's probably not somewhere that's going to help your cause if you're trying to get good talent into the door. But ultimately, if people are on, you know, really do need that money and they're being deducted or below that threshold, and I think it's absolutely right that we highlight that, because these are people's lives that have been impacted. Sorry, Sam, I know you're about to jump in, and I didn't mean to cut you off.
yes, yeah, sure. I mean, the working time, I think, will catch a lot of people out. And there's been a lot of focus in social media circles this past week. The question was the example of the individual who's been told off for not being at work earlier than their 7 o'clock start time because they've got to get ready. And so they're paid from the point they can commence doing productive time. But as far as national minimum wage is concerned, they're employed and should be paid from the point they start preparing. Yeah, and there's an element of, and then the argument kind of comes in, well, everybody else comes in 15 minutes early and they're not paid for it because they're doing this and that and getting ready and at their desk ready to work or waiting for the shop to open. And there's an element of, yeah, people might accept that. That doesn't make it right. And actually the one that's there on the dot is on time. Yeah, but it goes further, because it's then, if they're then going to penalise or affect the one that is on time, and HMRC inspectors come in, they may say, well, actually, you're okay with them, but all these other people, they're there at work 15 minutes early and you haven't paid them. They'll enforce the payment to everybody else.
Anything you'd like to add to that, Sam?
Risk.
No, I think it's all been covered. You know, there was a couple of names on that on the naming and shaming list that were done so by voluntary disclosure. And like Richard pointed out, employers can take learning from reviewing why other employers have essentially fallen foul of the regulations. You know, going back to the point, what can the employer do about it once they're on the list? Not a lot, other than pay the penalties and, you know, pay the employees back, but ultimately learn from mistakes, amend your processes, upskill your staff, and maybe have this as a regular upskilling session. You know, just along the panel, you can come to any of our employers and we can help upskill on national minimum wage compliance. But yeah, huge area. Employers definitely don't want to find themselves on that list. And it's an education point. It's a really, really complex area to wrap your head around. There's so many nuances. So just keep your eye on it.
And actually, it's a much, much smaller investment to get experts in to help you at this stage than to pay the price of being listed later and then having to pay the fines and go with it. So
I just wanted to go on the back of Sam as well. It's all about your own audit. You know, the way you find out that it's wrong is by your own ability. Part of our update this year has been going through the process that an employer needs to consider. So understanding what hours have genuinely been worked in the pay reference period, what am I actually paying them for that pay reference period, and therefore understanding, again, as Sam said, the nuance within that audit process requirement. You know, if you're not on top of that, then with all due respect, you are your own worst enemy in this process.
Quick comment. This has come in from Anne. It said, did I just hear that some were named on the name and shaming list who had done a voluntary disclosure to HMRC?
Yeah, so a couple of those employers had made that voluntary disclosure, but they would still appear on that list.
Okay. Well, let's go to our last subject. I'm conscious of time, and we missed it last time, and I don't want to miss it again. It's talking about how, actually bridging the gap between departments. Interestingly, I was thinking about this when we all did our introductions. All of us talked about how we are all in the Reward 300, which isn't known as the Payroll 300, but I think it gives an interesting insight into how we are starting to blend some of the things that we're doing. We are seeing, certainly from a recruitment perspective, in my perspective, an awful lot of bridging gaps between HR, payroll, pensions, finance, and rewards, to bring that in as a separate discipline as well, where it gets more confusing now. Where does one stop and the other begin? We talked a lot about payrolling benefits today as an example. Some are, some aren't, and there's some changes there as well. We are going digital, which makes things easier to blend, of course. And there are some challenges of shared responsibility, particularly when we have less defined singular touch points. Simon, we didn't get to this last month. I wonder if you can kick us off with your view.
Yeah, we discussed a little bit of this yesterday as well, Nick, just between us. But and interesting to hear what Sam's view is. But I think there has been a sort of a view as payroll is undervalued. That's the historic position. I've even been to the CIPP conferences where they've done the sort of the two Ronnies sketch, etc., of upper class, middle class, lower class, and where payroll fits. And we've had an opportunity over these past 2 or 3 years to be much more focused and critical to a business because of the reactive way we've had to be dealing with COVID and coronavirus job retention scheme and everything else, SSP reclaims, blah, blah, blah. And so we've been more in the forefront, and we have the ability to be, because actually we are primary data holders, keepers for helping aid planning business implication of reward choice. But there's an element of, we use that word reward, but the view is, do we elevate payroll by changing its name, or do we elevate payroll? And so personally, I mean, I don't mind it, but is it something else, or are we proud to be payroll professionals and will elevate us as payroll because actually we're at the top?
Well, actually, for me, the key change in what I've seen from a recruitment perspective, which I think is really interesting, you highlighted some really important things, particularly the pandemic, furlough, really thrusting the payroll into the limelight and raising the profile. But actually, I think the thing that's driving the profile increase now is, number one, people spotting, companies spotting an opportunity in the world of payroll, because data is now so much more important to driving strategic decision making at any level, and payroll has access to so much data that previously we didn't really have the technologies or the know-how or the I guess the technical tools to really make use of that data in the way that we now can. And I think spotting that value has really raised the profile of payroll, and a lot of the technological investments, whether it's being created in Silicon Valley or Austin or wherever it might be now, a lot of companies coming in knowing that payroll people have access to all this data. How can we leverage it to improve performance? And actually payroll are the key holders to that. So I think that's had a massive impact from my perspective in the way that's seen the payroll profession really rise up, because they're saying, hold on, they're the gatekeepers to this. What can we get our payroll managers, our payroll leaders to do with that data that can really help us improve the way we manage our employees? Whether that's looking at talent and retention statistics, absence management, regional pay gaps, whatever it is, there's loads of things you can look at. Ultimately, payroll are the gatekeepers and the key holders to some really powerful data. But that's something that I'm seeing. I'd love to get your view, Sam, from the CIPP side.
Yeah, I think, those 4 kind of broad department headings that we've got listed there, payroll wouldn't be able to function without those other departments, but equally, those other departments wouldn't be able to do their job without payroll. So then there does need to be, a bridge between those gaps. We've definitely seen, an increase in payroll's kind of strategic value within businesses. Unfortunately, since everyone really realised that they needed us throughout the pandemic. So when we're all deemed to be key workers, because If we weren't sat there calculating the job retention scheme and paying people, people would not have been paid. It really is quite that simple. You know, going back to the brand change, does payroll need to be rebranded, or do employees just need to be kind of upskilled as to how much payroll do? You know, it's a bit of a mimic that, you know, payroll, you push a button once a month. Yeah, we do. And automation and technology is amazing. So, yes, we can push a button once a month, and that deals with your processes and your reports that need to be sent to HR, to pensions, to finance to get the backs gone. But what about all the other things that we do? The level of empathy you need when someone calls you up who's in a really tragic position and they want their pay sorting. They want that kind of reassurance that payroll will be there and they will still get their, you know, wages paid on payday. The question, where does one stop and the other begin? That's a really difficult question. And I think really everyone's interpretation will be different based on previous experience, the company that you work in. You know, I've worked within operational payroll roles where I've sat under HR. I've also sat in roles where I sit under finance. But should payroll be sat on its own? Should it just be completely separate from HR or finance? There's arguments either way. And I'm now kicking myself that we haven't asked a poll question around this, because it would be really, really valuable. Yeah, to see what the audience thinks on this one as well, mainly where they sit within an organisation.
I'm going to lead this into a question for Richard in just a moment, but I want to just comment on something you mentioned there, which is, you know, people, you know, we talk about the button, we talk about the idea of automation making payroll jobs simpler, right, and taking the manual tasks out. Now, I don't know about you on the panel. I certainly don't know about the 91 people that are still, or 95 people that are still with us. But from my perspective, I have never seen people working in payroll work more. Like, it hasn't made your jobs any less busy. It just means you can do more things with the data and the people. It's allowed you to get involved in having an impact on financial wellness, on the employee experience, in loads of other more holistic and actually probably more employee valuable processes. That means you're not done in the data. I think what's really interesting is those that don't have an understanding of payroll think that automation's just made it easy. So all you do now is sit at the back office, twiddle your thumbs until the end of the month. Payroll people now have been arguably more burnt out than I've ever seen them before, right? It's a real issue in the industry with burnout and people working too many hours. And we know that a lot of companies are struggling to find talent for those reasons. People are leaving the industry because it's been too hard. So actually automation is great, and tech has been fantastic for evolving the profession. But I think for those certainly in it, and I'm sure those on the show today will agree, I would like to think, in terms of the experience I've had speaking to payroll professionals, is they're working harder than ever. I know, Richard, you've done a lot of work on that financial wellness piece and understanding, you know, people's involvement in other areas. So what's your view on this?
In relation to the question of the gap, I think, being slightly controversial, is it payroll that needs to rebrand, or is it a company that needs to reconsider and restructure correctly? Is my first statement. Because, you know, if you look at somebody like myself or Sam or Simon, or, you know, we've been in the industry for about 10 years each, I'd say, obviously, because we're all in our early 30s. I was looking more at Simon there, obviously. You know, the job payroll do is significantly different to what payroll did. You know, way back when I was doing payrolls, it was far more gross than net, with some benefits, where now payroll is so integrated into so many different aspects of the whole people, reward, benefits, and also wellness areas, that actually, is it the ignorance of a company of considering payroll as the people that push the button, rather than the company that should be saying, well, actually, the payroll element or the people element or the information we have within that payroll is integral to other parts of our company. So I'm going to flip it on its head and take away the rebrand and actually say payroll should be louder. Payroll should be telling its business what it has, what it can do, what parts it plays, and the company should be reviewing what it does. Does that make sense?
It does make sense. Yeah, and interesting, we're getting some commentary on this as well. Let me read out some of the comments that have come in while we've been chatting away. One is a question related to a previous slide, so I'll come back to that in just a moment, Emir, so I haven't forgotten that. The one someone said here, what are people's experience of payroll data being provided to other departments? For example, information for personal tax returns, P11Ds, audits, etc. You know, there's obviously an issue there that's raised that question. Yvonne has said, I believe all four are intertwined. I think we all probably agree in that in some way. It's very hard to completely separate them. But interestingly, Tracy says, I've been a payroll manager in a company for the last 6 years, but even now employees still go to HR first with a payroll question. For me, that relates to what you were there saying, Richard. We've got to shout a little bit louder and be really, I'm not saying this will solve Tracy's particular problem, but I think generally, you know, educating internally the businesses of what the roles payroll professionals can play and the information.
I think just going back on that, you mentioned about financial wellness. The number of businesses that are currently going through, for instance, the review of pay on demand, the whole aspect of financial wellness, and the support and education, and the number of companies that we hear that don't even incorporate payroll in it until they get to the point where they need the deduction taken from pay. And I think that's just absolutely crazy, personally.
Interesting. Simon, any additional commentary from what you've just heard or from those comments made?
Yeah, the only other comment I make, I mean, we all knew Maria at McDonald's is now retired. When the Olympics came along, she invited herself to the McDonald's strategic planning meetings for what they were going to do, because she could see it as a critical item in relation to paying their staff. But they didn't in their planning. And the only comment I'm saying, and I'm agreeing with the others, we've tended to be operating as independent departments within businesses, and which is great, but there are interdependencies, and increasingly the topics we've talked about even today, payrolling, gender pay gap, if I call it holiday pay, they're not payroll alone questions. They are HR, payroll, finance, and business questions. And then you've got your pensions AE and pension professionals, if we include that aspect. We have interdependencies with each other, and we need to be communicating and working together. And I think that's probably the point that was made elsewhere. Whereas before, the only interaction you probably had between those departments was a piece of paper.
Mm. Well, interesting. It's been many times that you've said, Simon, with a response to the various questions, well, I can give you the answer, but it kind of depends on what your contract of employment says. And that's a really interesting example. We're often answering a payroll-related question, but of course it relates to a contract of employment, which you would argue sits with HR, and it gives an example of where they are intertwined. We often quote case law, and that's an example of where it intertwines with legal often, where we need to see what precedents have been set. We have Andy, who's usually a panel member who couldn't make it today, who talks about pensions and the interconnectedness there between payroll and pensions, which we know is clear. So I think I echo what you've just mentioned there as well. I think it's absolutely right. I know, Sam, you were nodding your head as well.
Yeah, I just think I really feel for Tracy in her role. The question that came in, people go to HR and not straight to payroll. This is where, we've got National Payroll Week coming up in September. All payroll professionals, that is a week where you can shout from the rooftops about the importance of your role. If you work in an organisation where you're fed up of, all your managers and your team leaders missing payroll cut-off, put half an hour session in, an upskilling session, put it on Teams, put it on Zoom. If people can't make it, record it, allow them to watch it back, and shout about the importance of payroll and why you should hear us out and why you should come to us first. If you go into HR and they then need to ping an email on and blah, 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 it takes more time. Just come straight to us. So National Payroll Week this year is running the first week of September. So it runs from the 4th to the 8th. Alongside the Payroll Centre, the CIPP, are advocates for that week. You can register your interest now. You can go onto the CIPP website, go onto our events. You can register to get a downloadable pack, and in there you'll get bunting that you can print off and pin up around the office. You'll get posters to pin up on the back of toilet doors. You know, let's really make a noise and elevate the profession and let people know how important we really are.
Super.
There's no such thing as HR week. It's just payroll.
There doesn't need to be.
It's true. I think also on the back of what Sam was saying when it comes to that week is people love a bit of legacy. Come to the payroll department. Come and see what we do. But what's the world today? The world today, they want to see films. They want blogs. They want, actually embrace how people want to experience payroll week. I think that's really key as well. Do some videos, make a film, make a song, Nick.
Well, exactly. Yeah,
my
career.
Good song.
But on a serious note as well, though, this interconnectedness. Sometimes we don't see things shifting until suddenly things suddenly exist and we don't know where they happened. From my perspective, obviously, I'm recruiting different positions in the world of payroll, and we've seen titles change significantly. We are now, for those maybe not seeing it because you're not looking for it. When you're immersed in the world of recruitment, you see this in a slightly different view. But the titles we're recruiting for now are very, very different to what they were, even pre-pandemic. So only a few years ago, we've got payroll strategic partners. I'm working on a role at the minute that's a global payroll program director. There are a lot of new titles, new positions coming into the market, which does kind of show the gap is shortening, because a lot of them are hybrid type positions now that do involve responsibilities that are immersed in pensions, finance, HR, IT in particular as well, and tech now. We're dealing with some payroll engineering positions which are very much immersed in software and coding and programmatic languages. So I think that's quite exciting, and I think we'll look back and go, actually, we didn't really see it coming, but suddenly all these people exist and they're hybrid and they're working at hopefully at a high level with more onus put on the profession and what it's doing. But to echo what Sam said, I think it's a great way to finish the show. I've got one question I'm going to ask the team because it's been here for a while. It relates to a previous slide. However, National Payroll Week should absolutely be celebrated. So if you haven't got your packs and don't know more about it, do go to the CIPP website and find out more, and do get involved. We'll be doing what we can here at PQT as well. And I know that everyone on the panel will be celebrating it in style. So it's your opportunity to really shout from the rooftops about how great this profession is, and really also celebrate the teams that support you. To all those people underneath as well that worked tirelessly to get the payrolls out, this is their opportunity to shine as well. So do go to CIPP to get that information. Right, to come back to that question, does anyone find education a challenge for employers around payrolling benefits? Simon.
If we're talking about employees, I don't know. Education. All right, let's go back to the beginning. I think the challenge with most people I've seen that have gone ahead with payrolling is they've not planned it, because it's a view of thinking it's the same as P11D, just in a different way. It's similar, but it's not the same. So there is an element of thinking you do need education to understand what the difference is, and it is subtly different. P11D is about retrospective, dealing with a history that's happened. Payrolling isn't. It's a prediction of the future, which, if things change, you have to adjust. And so it's understanding that. So if that's relating to the question, yes. Now, is it an element of, do the employees need education? I think that's an easier exercise because their tax is right immediately. But can senior management understand it? Can they just sometimes be a bit indifferent? And do they see it as a problem anyway? I don't know. So I've sort of tackled three angles there of thinking, what's the question really asking? But from a payroll point of view and decision point, we do get loads of people say, oh, the business has decided to payroll everything. Right, we'll implement that next month. And the first question we'll kind of ask them, because we're there to help and we implement loads of payrolling. So implement most. The first question we ask is, have you registered? And they look at us as if we're mad. And it's sort of, if you haven't registered before the 5th of April, you can't. But equally, there's an element of when it comes to, oh, we'll come back to you next year then and do it for next year. When they come back to us next year, the same question is, have you registered? Oh, well, you said that last time, so now we're here a year later. But have you registered? If you haven't registered, you can't do it. You've got to wait another year.
I'm going to hold that thought then. So we're at the end of the show, but while we're on the focus of have you registered, a quick reminder for some action points for everyone that's still with us, all 90 of you or more. Remember to go to the CRPP and get your information on National Payroll Week. Don't forget to do that. Do remember to sign up for the premium webinar we talked about earlier, which is being held by SD Worx on the 14th of July. You can find out more at sdworx.co.uk. And also, please do remember to register for our next show, which is on the 28th of July. Again, you can access that at sdworx.co.uk/PQT. And we're not running a show in August, so this is your last chance before the summer to really get up to speed with everything. So do register. Even if you can't make the show, you'll still get a copy of the audio and the slides afterwards. And you'll get a survey after this show, so let us know what we want to talk about in that episode. Just leaves me to say one final thank you to all of you, our audience, for joining us today, and to our wonderful panel, Simon Parsons, Sam O'Sullivan and Richard George. And I wish you all a wonderful weekend. Thank you very much.
Thank you. Take care.
Thanks.